What the heck did we just witness, people? Hey, everybody, welcome to the program. Bull, boom, bear, bust. Let's go ahead and get right into it, folks. Huge stock sell-off on Friday. The biggest two-day crash of all time. When you look at just the 2 days, Thursday and Friday, the biggest decline, drop, crash, collapse of all time. The day that we all knew was going to get here. We just didn't know exactly when, but we started warning you back in before November. We said the new administration, they're going to unleash a lot of craziness, a lot of changes. We knew this day was going to come. I thought it was going to happen much earlier because the writing was on the wall. It was obvious, but the markets are now finally panicking, freaking out, whatever you want to call it, in a huge market sell-off. So I hope you were positioned for it, folks. We're going to get into that and more. Please make sure you're subscribed. Let's go ahead and get into it right now. First of all, how bad was it? Well, the Dow Jones today was down over 2,200. I'm actually recording this on April 4th. You're probably watching this on April 5th because it's a little bit later in the day. And we're going to take a look at some charts here, the S&P 500, the Dow Jones, and give you the insights here and what I think is going to happen. And I don't see any bottom for this. You may see some recoveries, and then I think it's going to be followed by deeper downturns. Those are head fakes, folks, because unless something changes, these are definitely market scaring policies that are being implemented right now. All right, folks, let's begin here with a year-to-date chart with the Dow Jones. Obviously, you could see we've more than erased all the gains, and we're negative, actually, year-to-date. If you go out to a one-year chart, going to April of last year, we've wiped out all the gains in a year. Let's go out to a 5-year chart. Doesn't look as bad on a 5-year chart, but you look all the way to the right side here, it's pretty drastic, pretty dramatic. In fact, let's go out to a maximum chart. This was overdue. Again, all of us knew this was coming. We see the markets all the way through the 2000s, even the financial crisis, the markets went up, nothing that crazy. Folks, the past 10 or 15 years has just been insane levels of money creation, printing, and throwing fuel on the fire, low interest rates, massive debt accumulation, spending, and this had to happen, right? It took some pretty major changes, and it took some pretty major new policies to be put into place. We're talking about the tariffs and everything else, the layoffs, the investigations and into the spending, the cutting of the spending, all this combined. It took a lot to turn these markets down, but something always does, right? Doesn't mean that they're going to not reverse this and push the markets again to all-time highs, but I don't think so. I don't think it's going to happen this time. Let me move that out of my way. Why? Because we've got permanent changes that are happening right now. Remember all the new money creation that they found out about, the 14 secret computers that were just making payments out of nowhere, that weren't on the budget, they weren't on the balance sheet, they weren't even put into the debt numbers, but they were still put into the economy, causing more inflation. Well, those days are done, folks, and who knows what else we're going to find out here in the coming months, maybe even weeks. And there are some permanent things being flipped or changed. Now, is the way that the money is created going to change at some point? We don't know, but I'm thinking at some point we have to see an end to the madness. And it's not just me saying that. Look at the flight to safety right now. Look at the influx into gold. Look at actually cryptos. There's a lot of money going into cryptos. Cryptos actually didn't sell off like it normally does with the huge stock market drop. So it looks like a lot of the money from the stock market is going into cryptos, right? And I'm sure we're going to see it go into precious metals as well as a flight to safety. But this tells you, folks, that things are changing, right? Central banks have been accumulating gold. They've seen the writing on the wall. That's why we just pointed to the obvious, folks, that things are headed in a different direction here. What's going to happen, though, down the road? Let's go ahead and get into some other information today. Oh, real quick, actually. S&P 500, very similar if you look at it, very similar to the Dow Jones. This is year to date, right? We're down, from 58 at the beginning of the year, 5,800 to just over 5,000, so significant sell-off. 1 year, we've erased all gains. We started the year 5,204. And here we are at 5,074. So we're negative year to date. Out to a maximum chart, looks very similar, doesn't it? Big peaks followed by big drops. Now, how deep is this drop going to be, right? In the past, we've seen, peaks followed by 20, 30% sell-off. Then it took a while to recover. 2020 was a big difference. We had huge, 40-something% drop there in a matter of days. And then it recovered in a matter of just a few short weeks to new all-time highs, right? Same thing, a maximum money creation. And this drop, how deep is this drop going to be? There's channels out there telling people to buy the dip, folks. You don't know how big this dip and how long this dip is going to be. If you do know, please let us know your secret down below. But with all the changes that are being implemented right now, the trade wars, everything else that we've talked about here for months on this channel, with all these changes, do you really feel confident coming in, feeling like you're buying the dip at the floor? Or do you feel like, I feel like that who knows where the floor is, right? This thing could keep on going down. And obviously the markets don't like what's happening. And until some of these things are reversed, will the sell-off just continue? That's the concern I have. So when I am uncertain and when there's a lot of unknowns as far as the timelines on some of these things that we're seeing, I tend to be defensive. I tend to be cautious. I think most of you are on the same page as I am. So we're finally seeing it emerge, folks. This guy over here, this bear, is roaring much louder than this bull over here. And the wipeout continued to nail the average retail investor. Remember, it's the billionaire class that controls the stock market. They own 90+% of all stocks. So then when they decide to sell off, that's when you see what's happening today in the markets. It's the little guy, the regular working class investor that just has the money idly sitting in their retirement account or in their trading account that gets nailed. And it says it right here out of the Mail. Americans watch in horror as savings are wiped out as Wall Street chaos sees trillions more dollars evaporate. Folks, there's no reason for this. There's no reason for people not to know that this was coming. All right. Granted, I'm a small channel. Channels like my channel are small. Again, we knew this was coming. We just didn't know exactly when. But I would rather be out a few months early than just be a few minutes late, right? When you see your retirement account crash by 10, 20, now 30%, and who knows where this ends, that's a moment of panic, especially if you're near retirement and you thought you had this nest egg and you started making plans for how you were going to spend this money. Maybe you were going to go buy a house somewhere. Maybe you were going to do whatever, pay off a bunch of debt, maybe take massive vacations. And now a big percentage of that money has evaporated. And how much longer is it going to take now versus previous downturns to recover? Again, previous downturns, some of them took years. Great Depression took years to come out of. 2020 health crisis, that took just weeks to come out of because of the massive money that was thrown at the problem, thrown into the system. The backstop, if you will. Now, the backstop doesn't seem to be there. Like, where's the plunge protection team? That's what a lot of people are asking. Has the plunge protection team been laid off? That is the question also. And even MarketWatch came out with a similar question. How far stocks would need to fall to trigger a circuit breaker as rout intensifies? Where is the circuit breaker? They go on to talk about here, circuit breakers have become a feature of the stock market to halt trading across exchanges. So that's when they halt trading. Of course, there's the plunge protection mechanism, of course, behind it as well. But again, with all the layoffs, with all the cuts, are the individuals or the people behind this that actually sit there and press the buttons, are they even employed anymore? Or is it just an algorithm that's still active in the background that at some point they're going to come in and pump trillions of dollars into the market? Or is it different this time? Again, nobody knows. If you know, please let us know down in the comments. If you don't know, give us your best guess. Is it different this time? Or are we going to see massive influx of new money coming in, pushing the markets back up, just like in 2020, where in a matter of days or weeks, we're going to see new all-time highs, folks? I don't think so. That's my opinion. I don't think so. Let me know your opinion on this one. So in other words, I'm going to go out on a limb on this one, and I'm going to say those words that really you should never say because you never know. It's different this time. Is it different this time? Of course. We've never seen this type of this type of change up in the whole system, right? The tariffs, the trade situation, the investigations, the cuts, the layoffs, you name it. Just so many things that we can't even cover all of them. So many things are changing right now. And what else did we see on Thursday and Friday? We saw record amounts of selling out of hedge funds. Now, I put hedge funds in the same category as the top 10%, the billionaire class. So when I say billionaires, I'm not just talking about individuals. I'm talking about these hedge funds, these trading institutions, because essentially they are billion-dollar companies. I put them in the top 10% because they control most of the wealth collectively, the billionaires, the multinational companies that control billions, in some cases trillions of dollars when you look at the BlackRocks and a lot of the hedge funds out there, major market movers. Just a couple of those companies alone can move the markets. But we're seeing a record number of margin calls, folks. The money that's being loaned out to these funds and investment houses is now being called back. So what's this going to look like? And is this going to be something that snaps the entire system? And who do we see getting burned the most, folks? It's, again, the retail traders, the little guy, the working class person. Retail traders keep buying the dip, and they keep getting burned as the big money, the billionaire class, the top 10%, continues to sell off. The little guy buying the dip is buying not the dip, because if it's keeps dropping, it turns out to be not a dip. So they turn out to end up buying the drop and not the dip. And here's how they put it over at this MSN article here. Individual investors have consistently bought the dip in stocks this year, but they've mostly been trying to catch a falling knife as the market continues to crumble in response to the uncertainty generated by this administration's policies. All right, but I should be clear, it's not all just the middle class investors getting wiped out. Some pretty well-off, well-to-do people, wealthy people are also losing significant amounts in these markets. Here's Dave Portnoy. He's the founder of Barstool Sports. He is down many millions of dollars. Let's take a listen.
I almost tweeted out, Dave, how much are you down right now and today? 7 million. I'm down. I almost tweeted out, Dave, how much are you down right now and today? 7 million. I'm down 7 million bucks in stocks and crypto. And it's tariff city. Trump has put his tariffs all over the place. I've been trying to understand them. I don't. Like, it's more a trade deficit tariff to me. Like, hey, we get this much shit from you and you get this much from us. Let's even that up. Let's get.
Even he didn't know, right? Someone with this much money you would think would be right on top of this. Defensive, like we've been over the past few months, very defensive because we knew this was coming. He didn't know. He says he didn't know.
Some wacky formula and do tariffs. And everything's in the shitter because of it. I almost tweeted out, Dave, how much are you down right now and today? 7 million.
And he's basically doubling down, saying that he's buying the dip, that there's going to be a rebound here. Take a listen.
The market will rebound. The market will rebound. The market will rebound. I'm buying left and right. I don't think Trump's just buying left and right. Rebound. I'm buying left and right. I'm buying left and right. I don't think Trump's just going to go out there and tank the stock market. That tanks the economy.
Too late. He already did.
That's depression. I don't care if you're middle class working. People say, which, by the way, Trump's people never said. I've seen a couple, only rich people care about the stock market. No, you need the stock market to rip. You need it to be solid. If the stock market tanks, the economy's donezo.
Unless you get out of the market, then you don't have to have the solid stock market.
But I have faith. I'm not panicking. I don't think he's a crazy person, even though Bill Ackman, he's like, sometimes you want the world to think you're crazy. Do you? I don't know.
That's the question going around right now. Why are they throwing such turmoil into the markets? Will there be something better on the other side? Will the grass be greener on the other side? That's what a lot of people are asking. That's the question. All right, and you've heard me say this if you've been on this channel many times. It's going to get a lot worse before it gets better. What we just saw in the markets needed to happen. It was inevitable. If it wasn't the tariffs, it was going to be something else that was going to happen, right? Too much debt out there. If we wouldn't have seen a market downturn, the other thing that would have happened eventually would be inflation was just going to wipe out millions of people. It had already begun It's already began to wipe out millions of people when you look at the delinquencies on the loans, the levels of debt, the defaults that started to happen, the credit card, late payments, worse since the financial crisis, auto loan delinquencies, worst of all time, even worse than the financial crisis. So all these things were accumulating. So we were on that path either way, with or without the tariffs, folks. That's what I'm trying to say here. And here's how they put it over at Investopedia. Stocks just had one of their worst weeks of the century. And the warnings just continue to pile in regarding inflation. Jerome Powell, the tariffs could mean inflation is here to stay. No more transitory. No more, we'll wait and see. Could be here to stay. But again, nobody knows exactly. No one knows if the announcement's going to come out next week, next month, that the tariffs are off again, right? We've seen this red light, green light, on again, off again with this administration. We don't know exactly how this is going to end up. But I do know that if you're going to buy any dip, you might want to just kind of chill and just wait a little bit to see how this is going to play out. And I've said here kind of my strategy on this. When I see a 40 to 50% drop, that's when I'll start getting in, averaging in, not going all in, but just starting to get back in. And then if it drops more, then you have more money still set aside to put in even more. If we see a 60%, 70% drop, you have more money to put in. Even a 70% drop, I wouldn't go all in. I would maybe go 30% in of whatever cash is available. But 70%, I mean, I wouldn't see it getting much worse than that. It's possible. Anything's possible. There could be World War III breakout. Who knows? But that's just kind of my strategy and the way I'm looking at this. The economy added 228,000 jobs last month, but the unemployment rate ticked up. Right, and we've seen this as kind of a trend in the news and the business financial news, that the numbers put out there as far as how many jobs are added, but then in the background they won't tell you how many new people filed for unemployment. It's usually much more people filing for unemployment than the jobs that were added, and a lot of the jobs that are added are just people that were previously laid off the month before that just ended up getting back into the workforce. And it goes on here, the U.S. economy added a stronger than expected 228,000 jobs in March, a significant increase from February's downwardly revised gains of 117,000. Remember, you have to take all the federal jobs that were added or federal jobs that were created, take it out of that number. According to the Bureau of Labor Statistics released on Friday, the robust gains notched in March were likely a rebound after wildfires, bad weather, depressed job growth in January and February. And in fact, in March, the unemployment rate ticked up from 4.1% to 4.2%. And is the unemployment rate actually much worse than that 4.2% that we're being shown, the official number? Of course. Look at the number of people not in the labor force. It just took another tick up here. And let me go ahead and zoom in on this here for you. And we see it take a massive tick upward, slightly down in March, but not much. It's pretty much level from February to March. And what do you think we're going to see in April? We're going to see another uptick in this not in the labor force number because of unemployment's rising. And now what we're going to start seeing is the unemployed people losing their jobs, are going to have a much more difficult time getting back into the labor force. So these job gains are going to start dwindling along with the job losses and unemployment number continuing to go up. So that's going to be the trend that I see unfolding here in the next few months, especially if all the things that cause this panic right now continue. All right, people, let's switch it up a little bit here. Let's go back to the story that we talked about last week about this couple that were basically jailed in Mexico because they disputed some charges on their credit card regarding a resort and a timeshare. There was a couple from Michigan. Basically, they disputed several $1,000s worth of credit card charges because they felt like that their timeshare wasn't being given to them in the manner that they expected. And what happened was they got thrown in a Mexican jail. And this was a couple in their 60s. They're definitely not cut out for a Mexican jail. Well, they were released after being held in the Mexico over a resort payment dispute. They got released. So there's some good news for those of you that were following this story. And it goes on here with the update. The couple were arrested in Cancun following a dispute over a payment with the resort company, and they've been released and returning to the U.S. They were in the Mexican prison since March 4th following that disagreement and credit card dispute. And, quote, they're on a plane right now on a chartered flight to Michigan. And Barrett flew to Cancun on April 2nd to visit their pair. And let's see here. This was a representative from the United States, Tom Barrett from Michigan. Right, so it's interesting that we had a politician actually fly down there to help these people. Now, what if this wasn't a big news story? What if these people weren't middle class people from Michigan? Right? What if it was just somebody that wasn't being reported on, that got jailed for something else, maybe even less serious than disputing several $1,000s worth of a credit card charge? Would there have been this rescue? Would that politician have flown down there and helped them? Of course, that was from the same state that the people were from, but my point is, how many people get locked up down there and you never hear about it and nobody cares because it's not being reported, right? So pretty interesting, folks. Following all this stuff here, this market sell-off, please let me know down below, where does it end? Is there a bottom? Is the plunge protection team even employed anymore? Have their jobs been cut? Unless it's just a computer somewhere with an algorithm that's just going to come in and buy the dip and push these markets up, folks. Nobody knows. I'm still being defensive here. You know this guy. You know my thoughts. Let me know your thoughts down in comments. Like to hear from you on this. As always, everybody, keep stacking. Big love. Bye for now. Peace.